Hey everybody, I'm here with Guillermo Santos with Supreme Lending. What's up, G?
Hey, what's up, man? How are you?
Good, man. Hey, so Guillermo, a lot of my buyers, they've been asking me, and that's not my buyers only, but buyers in general have asked me what are good first-time homebuyer programs with lots of money, some money, no money.
Here's the bottom line. If you have a 640 FICO score, you've had a job for 2 years, right? You don't have a down payment, however you make pretty good money, right? And as long as your debt to income, meaning you don't have a lot of debt,
right?
So here's the deal, like for every $1,000 you make,
right,
you got to make sure that $450 of that every $1,000 you make is free to cover all of your bills, including your mortgage and property taxes and everything. So let's make it really just to the real. You have to be able to afford your loan.
Can you look at the camera and say that again? Just tell them.
Yes. So when people always ask me, hey, so what are you looking at? Like, what part of the income are you looking at? Okay. So for every dollar you make,
right,
you have to have $44 or for every dollar you have 45 cents has to go to cover your credit cards, student loans, car payments, home note, and property insurance. Everything has to be fit right there. So for example, someone makes $100,000 a year. If we don't look at the whole $100,000, we're looking at $45,000 of the $100,000. Right? So there are some occasions, I know that FHA, which is a Ginnie Mae loan, which is a different program. FHA, you could go up to, 56 cents, not 45 cents.
Right.
But if you're trying to do a Fannie Mae loan or a first-time home buyer, like for example, Cal HAPA,
right,
which is a fantastic loan, by the way.
Right.
Cal HAPA, they'll max out at 45 cents to the dollar. So as long as anybody could just do the numbers, that my car note's 200, my student loans are 200, well, just know that those are going to be included when we're looking at whether or not you could afford a house.
So Guillermo, we were talking about for every 45 cents on the dollar, what a first-time buyer would need. So just say, for the sake of easy numbers, if a buyer makes $10,000 a month, what are they looking like in terms of a payment? Or
right. So let's say let me give you a scenario. So let's say someone has normal, they have some few blemishes in credit, but they have like a 680. Right. FHA is a great option for them, and let me tell you why. Because it opens up. So let's say someone that makes $10,000 a month. Right. Typically, what the bank is looking for is that not only the mortgage. If let's say you do a mortgage and it costs a certain amount, but let's say all of your bills. Right. They don't want that debt to income, which is what it's called. It's called debt to income. They don't want that to be above 45%. Okay. If you're a first-time home buyer, buying using a Cal HAPA.
Right.
Loan. Okay. With Fannie Mae, for example, many people I could get a DU approval at 49%, like 49.98, right?
Almost 50%.
Yeah, almost 50%.
Almost half of your income is going
towards like everything, and that is ideal because it goes. Let's say you could now it goes from 45 to 5,500 a month, and that covers like a big payment somewhere. Right. FHA, because a lot of students have student loans, they have a car, those car payments are expensive. If someone has pretty decent credit, we could go up to 56%. I've seen 50 and 5.99. That's 5,600 that could be utilized if you're making 10,000 versus the 45. So just keep in mind. Right. A lot of questions that I also get is it more expensive? How expensive is it? See, in a perfect world, everybody wants the cheapest loan.
And the cheapest payment.
And the cheapest payment. And
they want down
payment. They want everything, but they don't want to really pay. And then you have sellers that have you know, way over expectations.
Right,
like it's not
30,
lifestyles of the rich and famous.
Right, yeah.
Right, it's
your house is not cribs.
Yeah. Except yours is.
Too. Well, no, I'm
just
sure
like, you know,
yours. So this is the cribs guy.
But anyhow, a first time home buyer, as long as they're aware, you know, if they, you know, if someone has $2,000 in credit card payments, student loans, and car payment, right, that means that $4,500 is now $2,500. So now you could afford a house, where your payment, your mortgage, the property taxes, HOAs if they're HOAs, homeowners insurance, if it has a flood, all that stuff, like that needs to be fit nicely within 45%. Right. For the most part. Right. For the most part. But again, I'm able to work with clients and expand that to above that 45 sometimes. If it makes sense.
So listen, thanks Guillermo for sharing this information with us today, man.
Absolutely.
Really appreciate it.